125% tariffs on China, effective immediately. That's what President Trump just announced in what Commerce Secretary Lutnick called one of the most extraordinary posts of his presidency. Meanwhile, most other countries got their tariffs slashed to just 10%. This unexpected move sent the S&P 500 soaring 7% in a single day. Here's the real story behind this economic bombshell. Trump's tariff bombshell. 10% for allies, 125% for China. Hey everyone, welcome back to the channel. Today we're diving into what might be one of the most significant economic policy shifts of President Trump's new administration. If you've been following the markets this week, you saw that massive jump. The S&P 500 rocketed up 7% in a single day. That's the biggest one-day gain in 5 years. But why? What caused this market explosion? It all comes down to President Trump's dramatic announcement about his tariff policies. In a single Truth Social post that Commerce Secretary Howard Lutnick called one of the most extraordinary of Trump's presidency, the economic landscape shifted dramatically. So buckle up as we break down exactly what happened, why it matters, and what it means for the global economy, American businesses, and your wallet. Let's start with what actually happened. On Wednesday, President Trump made 2 major tariff announcements. First, he announced a 90-day pause on the full implementation of his reciprocal tariffs that had just taken effect on many countries. Instead of the higher rates that had been implemented, most countries will face a significantly reduced 10% tariff during this pause period. Second, and this is where things get really interesting, Trump simultaneously announced that tariffs on Chinese imports would skyrocket to an unprecedented 125% effective immediately. This two-track approach represents a dramatic shift in trade policy, rewarding countries willing to negotiate while taking an extraordinarily hard line with China. Display quote from Trump's announcement. Based on the fact that more than 75 countries have called representatives of the United States to negotiate a solution, and that these countries have not, at my strong suggestion, retaliated in any way, shape, or form against the United States, I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately. So what prompted this sudden change? According to Trump, it comes down to 2 factors. Diplomatic engagement. The president cited that more than 75 countries have reached out to various U.S. departments, including Commerce, Treasury, and the U.S. Trade Representative to begin negotiations on trade imbalances. This willingness to talk appears to have influenced Trump's decision to temporarily lower tariffs for most nations. China's stance. In stark contrast, Trump accused China of showing a lack of respect to world's markets. This accusation appears to have motivated the dramatic escalation of tariffs against Chinese goods. It's worth noting that this approach aligns with Trump's long-standing position on trade. He's consistently advocated for bilateral negotiations aimed at reducing trade deficits and has been particularly critical of U.S.-China trade relations. Commerce Secretary Howard Lutnick emphasized this distinction in his statement following the announcement. The world is ready to work with President Trump to fix global trade, and China has chosen the opposite direction. The market reaction to this news was immediate and dramatic. As I mentioned at the start, the S&P 500 jumped by about 7%, putting it on track for its largest single-day gain in 5 years. Why such a positive reaction? Market analysts point to 2 key factors. First, many investors had feared that across-the-board high tariffs would trigger immediate retaliation and potentially spark a global trade war. The 90-day pause and reduced 10% rate for most countries significantly reduces that immediate risk. Second, the policy creates a clear incentive structure for countries to negotiate with the U.S., potentially leading to more favorable trade terms without the economic disruption of an all-out trade war. That said, the massive escalation against China introduces new uncertainty into global supply chains that are still heavily dependent on Chinese manufacturing. Let's talk about the China angle. 125% tariff is extraordinary. It effectively more than doubles the price of Chinese imports before they even enter the U.S. market. In his announcement, Trump stated, at some point, hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable. This represents perhaps the most aggressive trade action against China by any U.S. administration. It's clear that Trump is using tariffs as leverage to force concessions from Beijing on long-standing issues including intellectual property protection, market access for U.S. companies, currency manipulation concerns, state subsidies to Chinese industries. The question now becomes, how will China respond? Will they come to the negotiating table, or will they retaliate with their own measures? China remains one of America's largest trading partners despite years of tension. Beyond China, this announcement has significant implications for global trade. The 90-day window creates an urgent timeline for countries to negotiate with the U.S. administration. What might countries be expected to offer in these negotiations? Based on Trump's previous statements and the language in this announcement, the administration appears focused on reducing trade deficits with partner countries, eliminating what they consider unfair trade barriers against U.S. products, addressing currency manipulation concerns, dealing with non-monetary tariffs, which likely refers to regulatory barriers and other non-tariff obstacles to trade. This creates both risk and opportunity for America's trading partners. Countries that successfully negotiate agreements could secure better trade terms than they had before, while those that fail to reach agreements could face higher tariffs after the 90-day window. For American consumers and businesses, the impact will vary significantly. For most imported goods, the temporary 10% tariff will increase prices, but not as dramatically as initially feared. Companies that rely on imports from countries other than China may still face higher costs, but they now have a 90-day window to adjust supply chains or negotiate with suppliers. However, products reliant on Chinese components or manufacturing face potentially massive price increases if the 125% tariff remains in place. This could particularly impact electronics, furniture, clothing, and many other consumer goods where China remains a major producer. American manufacturers competing with imports will generally benefit from the tariff protection, particularly against Chinese competitors. However, manufacturers who rely on imported components face increased costs. So where do we go from here? The 90-day clock is now ticking for countries to negotiate trade terms with the United States. We can expect a flurry of diplomatic activity as nations work to address Trump's concerns about trade imbalances. For China, the path forward is less clear. The 125% tariff represents an extraordinary challenge to their export model and may require significant concessions or a dramatic escalation in trade tensions. For investors, businesses, and consumers, this remains a highly dynamic situation. The market has responded positively to the reduced risk of an immediate global trade war, but significant uncertainty remains, particularly regarding China. I'll be keeping a close eye on how this develops and will update you as negotiations progress, or if there are new developments. If you want to stay informed about these important economic developments, make sure to subscribe and hit the notification bell. Thanks for watching. What do you think about these tariff changes? Let me know in the comments below, and I'll see you in the next video.